All right, we've got the Info Edge earnings presentation for the quarter and financial year ended March 31st, 2025. Looks like we'll be diving into Naukri, 99 acres, Jeevansathi.com, and Shiksha.
Yup, the usual heavy hitters for Info Edge. Let's see how they fared up to March 2025.
On the next slide, we have the standard disclaimer. By attending the meeting/telephonic call, you agree to be bound. All the usual legal speak about forward-looking statements and not taking this as investment advice.
Always a good reminder not to bet the farm based solely on a presentation. They also clarify terms like Q4 FY25, meaning January to March 2025, and FY25, meaning April 2024 to March 2025. And 1 crore is 10 million. Good to have those refreshers.
Moving to the next slide, we're heading into standalone financial performance.
Right, let's get to the numbers. The next slide gives us IEIL standalone performance Q4 FY25. Billings are at rupees 984 crore, which is a solid year-over-year growth of 19.0%.
And revenue from operations is rupees 687 crore, up 13% year-over-year. Operating profit stands at rupees 231 crore. But the year-over-year growth there is a bit more modest at 3.0%.
That's interesting. Billings growth outpacing revenue growth and revenue growth outpacing operating profit growth. The operating profit margin is 33.7%. Cash from operations before taxes is rupees 536 crore, up 14.7% year-over-year.
They're also highlighting a cash balance of rupees 4,786 crore as of March 31st, 2025. That's a hefty sum. Earning per share for Q4 FY25 is rupees 3.82 on a post-share split basis, up 10.4% year-over-year.
And rupees 19.10 on a pre-share split basis for Q4 FY25. Employee count is 6,065. Lots of numbers to kick us off.
The next slide summarizes these key highlights regarding standalone financial performance for Q4 FY25. First point, billing growth in Q4 was driven by continued improvement in the recruitment business and sustained performance of non-recruitment. Deferred sales revenue in Q4 FY25 was rupees 1357 crore.
Second, standalone operating profit margins were 33.7% in Q4 FY25 as we saw. Third, earning per share EPS in Q4 FY25 was rupees 3.82 with that 10.4% year-over-year growth on a post-share split basis.
Fourth, cash generated from operations before taxes of rupees 536 crore in Q4 FY25, a year-over-year growth of 14.7%, and that cash balance of rupees 4,786 crore on a standalone basis, including wholly owned subsidiaries.
And finally, employee count as of March 31st, 2025 was 6,065. Pretty straightforward summary.
Moving to the next slide, Info Edge Q4 FY25 highlights sustained billings improvement coupled with operating margins expansion and improved cash generation. This slide has a few charts. Let's look at billings first.
For Q4 FY25, billings are rupees 984 crore, up 19.0% from rupees 827 crore in Q4 FY24. For the full year FY25, billings are rupees 2,882 crore, up 15.5% from rupees 2,496 crore in FY24. They also show figures including acquired businesses in dotted boxes, which are slightly higher.
Next, operating profit. For Q4 FY25, it's rupees 231 crore, up 3.0% from rupees 225 crore in Q4 FY24. That margin compression is notable.
It is. For the full year FY25, operating profit is rupees 973 crore, up 11.7% from rupees 871 crore in FY24. The margin for FY25 is 36.7%, a slight increase from 36.6% in FY24. So the annual margin actually improved slightly despite the Q4 dip.
Okay, let's look at revenue from operations. Q4 FY25 revenue is rupees 687 crore, up 13.0% from rupees 608 crore in Q4 FY24. For the full year FY25, revenue is rupees 2,654 crore, up 11.5% from rupees 2,381 crore in FY24.
And finally, cash from operations before taxes. Q4 FY25 saw rupees 536 crore, up 14.7% from rupees 468 crore in Q4 FY24. For the full year FY25, it's rupees 1,318 crore, up 16.1% from rupees 1,135 crore in FY24. So, cash generation looks healthy.
The note at the bottom says, revenue and billings in charts are on a standalone basis, and the dotted boxes include acquired businesses like Zwayam and DoSelect.
The next slide is a section divider. Business segments financial performance.
Let's dive in. The next slide focuses on the recruitment business. The billings growth rate improved to 18+% in Q4 with increased cash generation, starting with billings for recruitment.
Q4 FY25 billings were rupees 740 crore, up 18.4% from rupees 625 crore in Q4 FY24. For the full year FY25, billings hit rupees 2,158 crore, up 14.6% from rupees 1,883 crore in FY24.
Operating profit for recruitment in Q4 FY25 was rupees 278 crore, up 7.9% from rupees 258 crore in Q4 FY24. The margin for Q4 FY25 was 54.5%, down from 57.0% in Q4 FY24. Another margin dip in the quarter for a key segment.
For the full year FY25, recruitment operating profit was rupees 1,116 crore, up 6.2% from rupees 1,051 crore in FY24. The margin for FY25 was 56.3%, down from 58.2% in FY24. So an annual margin compression here too.
Revenue from operations for recruitment Q4 FY25 was rupees 511 crore, up 13.0% from rupees 452 crore in Q4 FY24. Full year FY25 revenue was rupees 1983 crore, up 9.8% from rupees 1805 crore in FY24.
Cash from operations before taxes for recruitment in Q4 FY25 was rupees 532 crore, up 16.3% from rupees 458 crore in Q4 FY24. Full year FY25, cash was rupees 1,344 crore, up 11.3% from 1,208 crore in FY24.
The Q4 FY25 highlights for recruitment are interesting. Overall billings growth of 18.4% year over year. Growth was widespread. Tech, IT services, BPM combined grew 17%, GCCs by 19%, other sectors by 19%, and recruitment consultants by 15%.
Key sectors like BFSI, healthcare, infrastructure, and manufacturing grew at double-digit rates. GCCs contribute around 16 to 17% of Recruitment India B2B billings in FY25.
IIM Jobs, Naukri Gulf, and Naukri Fast Forward also saw healthy billings growth of 33%, 26%, and 18% year over year respectively.
And the Naukri database now has 106 million resumes, with an average of 22K resumes added daily in Q4 FY25. That's a massive database.
Moving to the next slide, 99 acres. Billings grew at 22% year over year in Q4 FY25, and business was cash profitable for the full year.
For 99 acres, Q4 FY25 billings were rupees 160 crore, a strong 21.9% increase from rupees 131 crore in Q4 FY24. For the full year FY25, billings reached rupees 451 crore, up 17.0% from rupees 385 crore in FY24.
That's a 31.0% reduction in loss.
That's a good sign. Revenue from operations for 99 acres. Q4 FY25 was rupees 106 crore, up 14.3% from rupees 93 crore in Q4 FY24. Full year FY25 revenue was rupees 411 crore, up 16.9% from rupees 351 crore in FY24.
Cash from operations for 99 acres, Q4 FY25 saw rupees 27 crore generated, down slightly from rupees 30 crore in Q4 FY24. But for the full year FY25, it generated rupees 2 crore, a significant turnaround from a loss cash used of rupees 13 crore in FY24. So, cash profitable for the year is a key milestone.
The Q4 FY25 highlights for 99 acres mention that billing growth was driven by improvements in both the number of billed customers and average billing per customer. Broker and channel partner billings grew faster than developer billings.
Live new project listings grew 11% year-over-year in Q4, and live resale plus rental listings from brokers grew 27% year-over-year in Q4. They also continued to increase the efficiency of digital performance marketing.
On the next slide, Jeevansathi, billings momentum continued with 24% year-on-year growth and operating losses declined by 76% year-on-year.
Jeevansathi's Q4 FY25 billings were rupees 32 crore, up 23.9% from rupees 26 crore in Q4 FY24. Full year FY25 billings were rupees 111 crore, up 31.1% from rupees 85 crore in FY24. That's good momentum.
Operating profit/loss for Jeevansathi, Q4 FY25 saw an operating loss of rupees 2 crore, a huge improvement from a loss of rupees 9 crore in Q4 FY24. That's a 75.7% reduction. For the full year FY25, the operating loss was rupees 12 crore, down massively from rupees 59 crore in FY24, a 79.8% decline. They are really turning this around.
Revenue from operations for Jeevansathi Q4 FY25 was rupees 30 crore, up 25.0% from rupees 24 crore in Q4 FY24. Full year FY25 revenue was rupees 110 crore, up 28.8% from rupees 85 crore in FY24. Cash from operations for Jeevansathi Q4 FY25 had a cash burn of rupees 2 crore, better than the rupees 9 crore burn in Q4 FY24. For the full year FY25, cash burn was rupees 8 crore compared to rupees 55 crore in FY24. That's an 86.0% reduction in cash burn. Highlights for Jeevansathi: the matchmaking industry remains competitive. Key metrics like acceptances and two-way chats remain healthy. They continue to build on monetization efforts, introducing more reasons for users to pay. And importantly, marketing investments drove better efficiencies. Continued innovation with AI/ML and billings growth led to reduced operating losses. That explains the dramatic improvement in losses. The next slide is for Shiksha. Billings grew by 16% year-over-year in Q4 FY25, and the business generated cash from operations of rupees 26 crore in FY25. Shiksha's Q4 FY25 billings were rupees 52 crore, up 15.9% from rupees 45 crore in Q4 FY24. Full year FY25 billings were rupees 162 crore, up 13.6% from rupees 143 crore in FY24. Operating profit/loss for Shiksha Q4 FY25 had an operating loss of rupees 1 crore compared to a profit of rupees 6 crore in Q4 FY24. That's a swing in the wrong direction for the quarter. However, for the full year FY25, operating loss was rupees 1 crore, better than the rupees 3 crore profit in FY24. Wait, that doesn't make sense. Oh, I see. The chart shows Q4 FY24 as 6 crore profit, FY24 as 3 crore, Q4 FY25 as 1 crore loss, and FY25 as 1 crore loss. So, profitability has declined. Let me recheck that. Q4 FY24 profit of 6, Q4 FY25 loss of 1, FY24 profit of 3, FY25 loss of 1. Yes, so it went from profitable to a small loss annually. The quarterly swing is more pronounced. Revenue from operations for Shiksha Q4 FY25 was rupees 40 crore, up 1.6% from rupees 39 crore in Q4 FY24, a very modest increase. Full year FY25 revenue was rupees 150 crore, up 8.1% from rupees 139 crore in FY24.
Cash from operations for Shiksha Q4 FY25 generated rupees 16 crore, up from rupees 15 crore in Q4 FY24. For the full year FY25, it generated rupees 26 crore, up 6.5% from rupees 24 crore in FY24, so still cash generative.
Highlights for Shiksha: billings grew 16% year over year in Q4 and cash from operations of rupees 16 crore. Domestic private universities are expanding course offerings. Higher visa rejection rates for the US and decline in job prospects abroad have reduced student interest, with students opting for UK and continental Europe.
And the emergence of new private universities in India presents an opportunity for Shiksha. So, a mixed bag for Shiksha. Slower revenue growth and a dip in profitability, but still generating cash and seeing opportunities.
The next slide is a section divider: consolidated financial performance.
Okay, let's see the bigger picture. The next slide gives a summary of consolidated financial performance for Q4 FY25. First point, at the consolidated level, net sales stood at rupees 749.6 crore in Q4 FY25 versus rupees 657.4 crore for Q4 FY24.
Second point, the total comprehensive loss was at rupees 9,710.0 crore in Q4 FY25 compared to a comprehensive income of rupees 7,959.3 crore in Q4 FY24. Whoa, that's a massive swing to loss. Surprised.
That is a huge number. It must be due to exceptional items or investment markdowns, often seen with their Zomato/PB Fintech holdings. The third point might shed some light. Profit before tax without exceptional items in Q4 FY25 was rupees 716.1 crore compared to rupees 324.4 crore in Q4 FY24.
Ah, okay. So ex-exceptionals, the profit actually more than doubled. That 9,710 crore loss must be related to their investments, perhaps mark-to-market adjustments. We'll likely see details later.
The next slide is another section divider, operational highlights.
And the slide after that, page 15, shows Info Edge businesses. It visually lays out their core operating businesses, Naukri, 99 acres, Jeevansathi, Shiksha, strategic investments like IIM Jobs, Zwayam, DoSelect, Ambition Box, Hirist, Coding Ninjas, IL, and financial investments, Zomato, PB Fintech, Info Edge Ventures.
A good overview of their ecosystem. It's quite extensive.
The next slide, page 16, is a visual for Naukri with recruitment business key operating highlights as the overlay. It's the Naukri homepage.
And on page 17, we get recruitment business key highlights with dominant traffic share among peers. Q4 FY25 billings, rupees 740 crore. Q4 FY25 operating profit, rupees 278 crore. Q4 FY25 operating profit margin, 54.5%. Q4 FY25 cash from operations, rupees 532 crore.
Then some operational stats: 75+% traffic share, though the note says this is as of June 2022, so a bit dated. Approximately 50K billed customers for Q4 FY25. 22K resumes added daily in Q4 FY25.
106 million in the resume database for Q4 FY25. 568K job listings in Q4 FY25. 645K resumes modified daily and 949K average resume searches daily. These are impressive volumes.
The next slide, page 18, gives a breakdown of billings by customer type for Recruitment India B2B business for FY25. Tech, IT services, BPM, etc. account for 28.0%. Recruitment consultants are 25.5%. Other sectors are 29.7%, and Global Capability Centers (GCCs) are 16.7%.
It then breaks down these further. For example, within the 28% for tech/IT/BPM, IT services is 19.4%, tech companies 4.2%, and BPM 3.1%. And within other sectors 29.7%, BFSI is 5.2%, infra/manufacturing is 10.5%, and rest of other sectors is 14.0%.
The note at the bottom is key. Direct contribution from IT services, including IT services and GCC IT services companies, is approximately 25%. Overall contribution from IT services, including direct and through consultants, on a pro rata basis would be 30 to 35%. So IT is still very significant.
Moving to page 19, growing customer base along with enhancing average realization per customer. This shows trends for Recruitment India B2B. Number of billed customers grew from 69 in FY21 to 128 in FY25. That's a good upward trend.
Average realization per customer rupees went from 100 in FY21 to 130 in FY22, then 152 in FY23, dipped slightly to 149 in FY24 and back up to 152 in FY25. So it's been fairly stable in the last 3 years.
The note says customer growth of approximately 11% was driven by deeper Tier 2/3 penetration and higher SMB client additions, with average realization remaining flat due to the shift in customer mix.
That explains the flat realization despite customer growth. The next slide, page 20, is a visual for 99 acres, real estate business key operating highlights. It's their homepage.
And page 21 gives 99 acres key highlights. Q4 FY25 billings, rupees 160 crore. Year-over-year billings growth Q4 FY25, 22%. Q4 FY25 cash flow from operations, rupees 27 crore. Year-over-year reduction in cash losses in FY25, 119%. This likely refers to operating cash flow for the full year turning positive.
Operational stats, 181K plus total projects as of March 2025 and 956K plus total listings as of March 21st, 2025, which includes 400K plus owner listings.
The next slide, page 22, shows 99 acres traffic timeshare from desktops, laptops, and web mobile, sourced from SimilarWeb. It plots 99 acres, Magic Bricks, and housing. As of March 2025, 99 acres seems to be leading at 42%, with housing at 29% and Magic Bricks at 28%.
That's a significant lead if the data is accurate. 99 acres has shown a strong upward trend in traffic share from around mid-FY24.
Page 23 delves deeper. Buyers and tenants spend more time on 99 acres with lower/similar bounce rate versus most competitors. First graph, lower bounce rate on 99 acres platform, demonstrating the high quality of traffic. As of March 25, 99acres.com is at 35.05%, magicbricks.com at 45.62%, and housing.com at 51.14%. Lower is better here, so 99 acres is doing well.
Second graph, higher time spent by buyers and tenants on 99 acres platform, demonstrating high engagement. As of March 25, 99acres.com users spent 00 minutes, 3 minutes, 52 seconds. magicbricks.com 00 minutes, 3 minutes, 53 seconds. And housing.com 00 minutes, 3 minutes, 37 seconds. So 99 acres and Magic Bricks are neck and neck, and both ahead of housing.
These are positive engagement metrics. On page 24, key business metrics for 99 acres. Distribution of total 956K plus listings, residential 81%, commercial 19%. Distribution of 88.2K plus total customer base FY25, owner 53%, broker 40%, builder 7%. Billing breakdown by customer type FY25, broker 63%, builder 29%, owner 8%.
Interesting how owners are a large part of the customer base but a small part of billings. Brokers dominate billings. That makes sense, as they'd be the power users.
Next up, page 25 is the Jeevansathi homepage visual with matrimony business key operating highlights.
And page 26, Jeevansathi key highlights. Q4 FY25 billings, rupees 32 crore. Year-over-year billings growth Q4 FY25, 24%. Yearly reduction in FY25 operating losses, 80%. Year-over-year reduction in cash losses in FY25, 86%.
And 90+% user traffic and time spent on Android and iOS apps, this seems to be a qualitative statement rather than a growth figure. And approximately 21% yearly reduction in marketing spends in FY25. Cutting marketing spend while growing billings and slashing losses is a good trick if you can manage it.
Definitely. The efficiency drive seems to be paying off massively for Jeevansathi.
The next slide, page 27, is the Shiksha homepage with Education Business Key Operating Highlights.
Page 28 gives us Shiksha key highlights with a lot of icons and numbers. Course listings 5,30,000 plus. Unique clients 1,400 plus. Annual visits 460 million plus. Questions asked 2 million plus. Colleges 65,000 plus. Entrance exams 1,000 plus. Annual page views 970 million plus. Annual registrations 9 million plus. Student/alumni reviews 6,45,000.
Those are some large platform engagement numbers. Seems like a well-utilized resource.
Now, on page 29, we have a section divider, Investments.
Page 30 details financial investments in technology-based startups. Under investments in listed entities, Zomato, with shareholding at 12.43%, and PB Fintech Policy Bazaar, with shareholding at 12.52%.
Balance sheet investments in unlisted entities, 20 active financial investments in the portfolio, with a total carrying value of rupees 636 crore.
Then they detail their Info Edge AIFs, alternate investment funds, which are around a 50-50 partnership with a Temasek subsidiary. Info Edge Venture Fund, first scheme USD 100M Consumer Tech, follow-on scheme USD 100M Winners of Fund 1. Info Edge holds 50%. Info Edge Capital, corpus USD 167M Consumer Tech, Info Edge holds 44.7%. Capital 2B, corpus USD 83M Deep Tech/Patents. Info Edge holds 44.7%.
So they are quite active in the startup ecosystem, both directly and via funds. The next slide, page 31, is the financial investment portfolio. First, listed companies as of March 31st, 2025. Zomato, carrying value rupees 146.5 crore, shareholding 12.43%. PB Fintech, carrying value rupees 575.8 crore, shareholding 12.52%. Total carrying value for listed, rupees 722.3 crore.
Then strategic investments. These are more operational/synergistic. IL Network, carrying value rupees 82.1 crore, shareholding 96.31%. Zwayam Districal, rupees 128.4 crore, 100.00%. Do Select Axeli Labs, rupees 23.0 crore, 100.00%. Teal India Teralytics, rupees 8.7 crore, 23.03%. Coding Ninjas Sunrise Mentors, rupees 120.2 crore, 54.64%. Merito No Paper Forms, rupees 33.7 crore, 47.90%. Univariety International Educational Gateway, rupees 1.0 crore, 47.12%. Total for strategic investments, rupees 397.0 crore.
The note at the bottom says they may consider investment/asset monetization opportunities. That massive consolidated loss we saw earlier might be related to markdowns in some of these, especially the listed ones if the market turned.
Page 32 continues with financial investments unlisted companies. This is a long list. I'll just pick out a few prominent ones by carrying value as of March 31st, 2025. Shop Kirana, rupees 127.2 crore, 26.14% holding. Adda 247 Metes Edu Ventures, rupees 144.2 crore, 25.88% holding. Shipsy Lama Logisol, rupees 68.4 crore, 22.56% holding. VLCC, rupees 53.8 crore, 1.24% holding. Grey Tip Software, rupees 65.0 crore, 18.71% holding. The total carrying value for these unlisted financial investments is rupees 636.0 crore.
There's a note about Greytip Software being classified as a financial investment from JV in Q2 FY25 after a majority stake acquisition by an external investor, so its status changed.
The next slide, page 33, is a section break for balance sheet summary and data sheet.
And page 34 shows the standalone balance sheet summary as of March 31st, 2025. Total assets and liabilities are rupees 32,711 crore. Assets, investments make up 84.4%, cash and cash equivalents 10.7%, and other operating assets 4.9%. So they are very much an investment holding company in terms of asset base.
Liabilities, shareholders' equity is 84.7%, deferred sales revenue/customer advances is 11.2%, and other liabilities and provisions is 4.2%. So, well capitalized with low external liabilities beyond deferred revenue.
Now for the data sheets. Page 35 is data sheet Q4 FY25 1/2. For Naukri, number of resumes on Naukri.com reached 106 million in Q4 FY25, up from 98 million in Q4 FY24. Average resumes added daily is 22K in Q4 FY25.
Number of billed customers for Naukri Recruitment India B2B for the full year FY25 is 128K, up from 116K in FY24 and 113K in FY23. Billing distribution shows tech, IT services, BPM at 28.0% for FY25, slightly down from 28.6% in FY24. GCCs are up to 16.7% in FY25 from 16.0% in FY24.
For 99 acres, number of listings free plus paid in Q4 FY25 was 1387K, up from 1081K in Q4 FY24. Total for FY25 is 4835K listings. Number of paid listings for FY25 is 3266K.
Moving to page 36, data sheet Q4 FY25 2/2. This has segment billings, revenue, deferred sales revenue, and segment profit/loss before tax. We've discussed most of these trends already when looking at the segment slides. Recruitment Solutions profit before tax for FY25 was rupees 11,164 million or 1,116 crore, up from rupees 10,509 million in FY24.
Real estate 99 acres का loss before tax for FY25 was rupees 475 million, a significant improvement from a loss of rupees 688 million in FY24.
Matrimony. Jeevansathi loss before tax for FY25 was rupees 118 million, a massive improvement from rupees 587 million loss in FY24.
Education Shiksha loss before tax for FY25 was rupees 5 million compared to a profit of rupees 28 million in FY24.
So that confirms the dip in profitability for Shiksha. The total profit before tax for FY25 is rupees 13,435 million or 1,343.5 crore, up from rupees 11,132 million in FY24. This is before unallocated expenses/income and exceptional items.
And headcount at the end of FY25 is 6,065, up from 5,750 at the end of FY24.
The final slide, page 37, is Investor Relations Contact, with details for Chintan Thakkar, Director and CFO, and Vineet Ranjan, EVP Investor Relations, along with their website www.infoedge.in.
So to wrap up, Info Edge का core recruitment business continues to be strong.
99 acres is showing good turnaround signs, especially in being cash profitable for the year. And Jeevansathi has made phenomenal progress in cutting losses. Shiksha is a bit of a mixed bag with some challenges.
And the standalone financials are robust, but that consolidated loss figure was a bit of a shocker until we remembered the impact of investment valuations. Overall, a pretty detailed look at their performance up to March 2025.
Indeed, a lot happening across their diverse portfolio.